Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there, which is a lot, but also a little. S&P 500 is currently right at about 4380. That is up about 2% so far in the month of October, which is a little bit of a welcome end to the slide that we saw in September. So that's nice. And there's a couple of factors that are kind of driving that. The first and primarily and the most important is that it is the start of earnings season. Earnings drive stocks probably more than anything else, any other single factor. When we start to get positive news on the earnings front, we tend to see stocks react positively. The other thing that I would just say about that is to remind everyone that it is frequently lost in the whole conversation around interest rates and inflation that this dynamic actually plays into corporate earnings quite strongly if we look at the market as a whole. So if you're going to argue that the economy is slowing dramatically and thus we are not seeing much in the way of inflationary pressure and inflation is cooling off, then that also normally means that when we start to look at corporate profits, we would expect to see pressure there, right? Pressure in one side of the economy, whether it's on spending or wages, normally translates to Wall Street in terms of pressure on earnings of all of the companies that are out there that are trading. Similarly, if we see strength in the economy, inflation not slowing maybe as fast as we'd like it to, maybe higher interest rates for longer, that is normally a very bullish sign for earnings for the S&P. So just important to kind of keep that link in your mind. Certainly over the last couple of weeks, we've had more data that has been on the economy might be a little too strong side of the teeter-totter that we've talked about many times this year. And the flip side to that is if the economy is maybe a little too strong, then earnings might be a little bit better than what people were thinking coming into it. So there's a trade-off effect there. Last but not least, the other thing that is very clearly dominating the news right now is the war in the Middle East. The war, which is, obviously a humanitarian crisis and a tragedy. And I just want to be clear that everyone at RFG hopes that it stops as soon as possible and that we can figure out a peaceful resolution of the conflict. I will note from a market observation perspective that historically wars, particularly wars on foreign soil, have very little discernible impact on the stock market. The stock market may react for a day or two to the initial shock, but typically if you go back over a very long history, going back all the way to the 1930s and the 1920s, there's no real discernible impact between global conflict and the progression of the stock market. The stock market is an uncaring, unfeeling thing and really just cares about corporate profits more than anything else, which is why it doesn't really react or move around much. And I would also say that that is true for this conflict in particular, maybe more so than other prior iterations of wars in this region of the globe, because we are largely energy independent at this point. We import some oil. We also export a lot of petroleum products. If you look at our net production, we are effectively neutral. We don't really import that much. We import as much crude oil as we export in terms of petroleum products, which brings us to kind of neutral on the balance sheet. And the real reason why we do that is because we're better at refining than any of our closest neighbors. So we take a lot of oil from Canada and Venezuela and Mexico and turn it into refined products and then ship it elsewhere in the globe, which makes a lot of sense if you think about our strength on the refinery side. So market hasn't really reacted all that much. Don't expect that it will, which is not to say that it is not a tragedy and that we don't want it to end soon. It is more just a comment that it's not something that you need to be terribly concerned with when it comes to your own financial portfolios. So with that, as always, if you have any questions, please feel free to reach out to either myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.